George, NPLs, why are they rising in 2013 and not in 2012?
I think thank you, Ramah, for this show. I think what you've just said is actually true. What's happening? When between quarter 3 2011 and quarter 2 2012, when there was all the pricing benchmarks went up, eventually banks actually repriced upwards some of these loans which are easily repriceable. So what we saw is that there was, lendees, borrowers were actually having hard time trying to keep up with their mortgage payments or whatever type of loan that they took. So they couldn't keep up the payments. So I think what we've seen is that, if you look at the restructuring that happened in December 2011, what happens is that they actually literally just deferred the problem. So what we have is that banks didn't actually classify them. So what we have is that there's a salient pressure from the regulator for banks to reclassify these things. So what you're seeing, they're not new non-performing assets. These are existing non-performing assets that are actually gradually being reclassified. So that's the source of all this mess.
Indeed. Give us a sense of the lay of the landscape here. Where exactly are these non-performing loans concentrated with respect to the 40-plus banks that we have in the Kenyan banking sector?
We don't have a breakdown at the moment, but we believe that the problem lies in the SME books of various banks and the consumer books, which is the retail segment of the lending, the households, because these are the only segments of the market that are easily repriceable, either upwards or downwards. And what we saw is that there was a massive repricing upwards between 18% on average 18% to 24%, and that was massive. If you have an SME book, a huge exposure to an SME book and a retail book, they can't take in that kind of repricing. So that's too much. So you're going to have a percentage of that book that's going to find it hard to keep up with the payments.
Indeed. There was another line, of course, that jumped out to me in that report. You argue that if KCB and EcoBank had raised their provisions for bad loans to what they were in the third quarter of 2012, their profit after tax would be anywhere around 10 to 15 percentage points lower. Why are we seeing coverage ratios so far being so low among Kenyan banks?
Okay, two things here, Ram. One is banks are under pressure to report profits. And so that's why you see they keep playing around with the coverage ratios. And look, for example, Equity, which has one of the highest coverage ratios in this market, declined from 94% at the full year, 2012, and at the end of quarter 3, they were doing 71%. That's a massive, it just shows the pressure to report profits. Again, it also points to the amount of how slow they're going at the pace. The slowness is the pace of trying to reclassify these loans. So that's why our view is that, as the salient pressure from the CBK apps, then if they keep reclassifying more and more, then in quarter 4 they might reclassify more of them, and then provisioning might go up again.
Indeed. Finally, George, with respect to asset quality, if NPLs do go up, that will change the perception of these two counters in the market. But we have seen KCB and EcoBank both going up about 50% year to date, clearly outperforming the NSE 20. Is the market broadly ignoring the NPL problem, or are they seeing some salient value in these two banks? And they probably think, well, these two banks have the problem under control.
I think what the market is seeing is that the asset quality, which is the ratio of NPLs to gross loan book, is still below 10%. So they're saying, okay, still below 7%, below the red line. So they can still keep buying this. But I think a 100% jump in non-performing assets in Equity Bank, another 20% jump in non-performing assets in KCB should give them a worry. And I think if the trend maintains, then I think by the beginning of quarter 1, we'll look at the asset quality of these two banks, and by large the industry sitting above 10%, which I think at that point they should start to discount the values of these stocks, in my view.
Indeed. We'll have to leave it there for the time being. Thank you very much for your time. George Bodo, the head of research at EcoBank here in the Kenyan capital, Nairobi.